Alrighty guys, thanks again for our third edition of our property planning training. Now guys, just wanted to reach out to you. I always need many questions from you guys, so feel free, post in the group. Leanne posted last week, so feel free to post anything in the group. If it's too personal, send us a message on Facebook and we can obviously take your name off it, etc. But I'm going to be asking later as well, once everyone's online properly, I will be asking later, over the next couple of weeks, I want to do a few case studies for you guys. So if you have a certain scenario, you just want to run it past me, just have to message us on Facebook. We'll book a quick 10-minute call. I'll get a bit of a rundown of where you're at. I might have a few more questions than that. And of course, I want to do a bit of a case study, just a general case study. So I like unplanned case studies. I always work better if it's not planned. So guys, feel free, throw everything you can at me. I do want to make sure I'm giving you value here today. So, all right, so let's get started, guys. So tonight, what I'm talking about, this is probably the most important part when you're going to build a property portfolio. So say, for example, you go out to buy a business. You don't just go and buy a business with no education, with no support or a network of people that are involved, whether it's a solicitor, whether it's a bank or whatever it might be. You wouldn't go and do that without that network because you wouldn't be able to buy the business. So you've got to do research and there's different avenues for research, etc. So I'm a big believer that property investment, whether you've got one property or 20 properties, you should treat it like a business. So what I'm going to go through with you tonight is a full network of what I believe you need to make sure you become a successful investor. Now you don't need every part of this network straight up, but it's what you need to put in place to be able to grow your portfolio to the limit where you want to grow it. So guys, thanks again for coming along tonight. I just want to start off with the obvious. All right, so in your network, these are the main areas of the network that we have. Now, there are more than this, but this is the generic ones that I believe you need to have in place as at a minimum figure. So the first one I'm going to start with, obviously, is mortgage broker or bank. So what I mean by that is you need an experienced mortgage broker or an experienced banker who understands your goals of what you want to do with your portfolio and who's going to complement your portfolio. So a lot of mortgage brokers out there, no offense to mortgage brokers, but in every industry, you've got your good ones and your bad ones. So you want to make sure you find a really good mortgage broker. And there's a few questions I want you to ask these mortgage brokers. So if you go to see a mortgage broker, what I want you to ask them is, what property investment experience have you got personally, or does other people in your office have? So if you go to see a backyard mortgage broker who's got no experience in property investment whatsoever, they're going to put you with the wrong bank, they're going to structure your loan wrong, and they're going to be a nightmare. So what you need is a mortgage broker who knows how to structure everything you need to put in place, and or have someone else in your office who can also help them structure your loans correctly within your investment portfolio. So other things you need, you want to know, do they have any investment experience? So do they have investment properties? It's very important because they'll understand the process that you're going to go through over the next month, 2 months, 3 months, 6 months, whatever. So it's very important you have a mortgage broker who understands everything about property investment. Of course, they don't have to be professionals at it, but someone who has their own mortgage or an investment property is always good to have on your side because they know what you're going through. So they understand the pressures if you've got to sign contracts quick. They understand counsel, what they need if you need to put plans through counsel for whatever you're doing in your investment portfolio. Yeah, and you also, actually, just missed one thing, there's a couple of notes up here, is it'd be good to have a mortgage broker who understands small property development. So even if you're buying one property now, you want to make sure they understand a little bit about small property development because that might be happening for you in 2, 3, 4, 5 years down the track. And the biggest question I would always ask a mortgage broker, you can't ask a banker this, but ask a mortgage broker, who's your top 5 banks that you normally put loans through and why? Why do you put them through that? Not because they pay the most. It could be quicker turnaround times. It could be the borrowing capacity. It could be the structure that you're trying to put in place as an investor is going to work well with that bank. Because you want to try and avoid changing banks if you can. Of course, in some scenarios you have to, but you also need to know where the limits are with those banks as well, because after a while, you put so much into one bank, you do need to change to another bank. So that's not change what you existing got. It means that you need to start using another bank to actually continue with your portfolio. Because you don't want to have all your risk with one bank. You've got to diversify. Everything's about diversification. So the first one here is mortgage broker. So you need to get a loan. You need to get a loan approved or at least assessed. So some mortgage brokers, the experienced ones, don't need to put you through a pre-approval process. They'll look at your scenario and think, well, you're pretty good. I think it'll be fine. How about you find the property first? And then we put your loan through, ask for a 10-day cooling off period if you have to sign a contract. Like up in Queensland, most contracts are 21 days anyway, because a loan approval process is always quicker when you're on a cooling off period. At the moment, some pre-approvals are taking up to 30 days. But if you buy a property, that same bank will do it in under 10. So depending on where you're at and which mortgage broker you're using is whether you put a pre-approval in place first or just get the property in place and then put the approval in place later. Just don't outlay too much money until you have that approval in place. Okay, so the next thing is you need a legal representative. So this would normally be a conveyancer. All right, conveyancer, or in some cases a solicitor, depending on what transaction you're doing. But you need legal representation. And please, I'm going to say this a few times tonight. Do not be a tight ass. Do not skimp on every part of your network. You are basically buying a $500,000 asset, okay? If it's the same as like, I don't know, buying a $500,000 business, you're going to get full legal advice. So if you're going out to buy a $500,000 property, do not skimp and try and save on every single little dollar. If you're doing that, you should not be doing property investment. It's okay to save money and to be careful with money, but don't be a tight ass. It's just not going to work. So a legal rep, the first thing they want to do is you want to make sure your legal rep has read the contract. You'll be surprised on how many legal representations, whether it's conveyancers or solicitors, do not read the contract. So even me, as an experienced investor, have been burnt by a conveyancer who did not read my contract. Because a conveyancer or solicitor, well, basically it's a conveyancer inside a solicitor's firm, they read the contract. They want to know what restrictions are on the land, whether it's bushfire prone, flood prone, what the covenants are. So what can you build? What are you allowed to build? What do you have to put in place for your fence? Do you have to have a concrete driveway? Do you have to have a colour pond roof? There's heaps of different things that are restrictions on the land if you're going to build, and or if you're just buying the land, you want to know, if you're buying an existing house, you want to know where the sewer is, where the drainage easements are. You want to know where all this information is. So a good legal representation will read everything for you, but you also don't want a legal rep that's going to scare you off a good purchase. Okay, so you want to make sure of that as well. So you want a good, solid legal representation that's going to take you through every part of your contract. I personally have been called out with a bushfire zone, which put a build price of the house. I was going to build up $50,000. Of course, I never built that house. But for some, I never used that conveyancer again. That was a fair while ago. That was probably, back in 2006, I think it was. And I've never used that conveyancer again because he thought I would read the contract. I was too busy. That's why you pay a conveyancer for. So I got caught out on that one, but it all ended up well at the end. So, got your loan approval, you've got your conveyancer in place. Say you go out there and buy a property. Now, depending on what you're doing to the property, if you buy an existing house, everything's fine. But if you're going to build a house, build a duplex, build a dual key, or you're going to renovate the property, the next thing you need is a builder. Depending on whether you need a large-scale builder for like a townhouse complex, a mid-scale builder, which is like a house and land or whatever, or a smaller builder, which is more like a renovation or additions, you want to make sure you do some research on these guys. So the first thing you want to do is when you have your contract in place or your quote, you want a fixed price contract. You want to make sure you don't have anything that can blow out of proportion within your contract. There's always small clauses that gives the builders options for variations, but they'll normally come to you and address it on a one-on-one basis, not just spray you a big invoice. The biggest one is if you hit rock. That's normally the biggest one. But biggest thing is fixed price contract. If you're building a house, duplex, whatever it might be, most times I would go for a 100% finished product. I will not go through and go and landscape or driveway or fence myself. I'm too busy for that. And once you work out your dollar per hour figure as an investor, you'll probably see pay for the fence to go up, pay for the concrete to go down, whatever it might be, unless you know people. But even then, time's money. If you get delayed a month, it's going to cost you a month in interest. Just keep that in mind. Delays can sometimes cost you more than what the savings are. In the contract, you want to make sure they're very specific on inclusions. So whether you're building a property to resell to an owner-occupier, you'll probably have different inclusions that if you're buying the property to keep as an investor. So you might go at a higher level as an owner-occupier. Okay, so as an investor, you want good inclusions. Nowadays, you have to have fans, you have to have stone bench tops, you have to have air conditioning, all those important things. But as an owner-occupier, you might go to a different level of stone bench top. You might do a bigger kitchen. You might spend more money in some areas. That's going to have a better resale up the other end. But that's if you're flicking the property. That's if you're buying to sell the property to an owner-occupier. Competitive price, always a big one. Make sure you get more than one quote to make sure you have, especially renovations, definitely get more than one quote. For a builder, like a house and land, you probably don't have to for that if you've got a good regular builder, as long as they also build on time. Guys, make sure they build on time. You want to make sure that they have a contract period. If they go over, what are the consequences for it? Like last year, for example, we had a couple of contracts go over and the consequences weren't high because we've never seen it before. But now it's different now. You want to make sure that you can build a competitive product on time, because time is money in property investment. So it can work in your favor or against you. So you want to make sure whatever transaction you're doing, when time's involved, it's working in your favor every single transaction, because that's where you'll make money sometimes just with time. All right, so you've got your loan structure, your conveyancer, and now you've got your builder in place. You don't always have to have a builder, of course, that's only if you build. And then, of course, your next one is your property manager. So you take ownership on the property. It's finished, moved in, you take ownership. So you've got to have a really quality property manager. Now, these people are going to be your communicative person to your tenant. You do not want, in most cases, I don't, you do not want to give your tenant your phone number. They'll call you about everything small, everything big. It's your property manager's job to do that for you. So you need a good, solid property manager. Most times, you will see, when you go to an office, real estate office or whatever it might be, the property manager you use is the person that you're going to be in regular contact with. So it's not the actual office, it's the person, it's the property manager. So the first thing I suggest to do is, if you've got a good property manager, make contact with them, make sure you know their details, like a bit more about them, because if they leave that office, you want to follow them, you want to find out where they went, because the next person coming in place might not be any good. So they might be fine, you might not have to change, but you want to make sure that if you have a good, solid property manager in place, that you can find them if they do change offices, guys. Okay, so obviously you only need a property manager in place if you're going to hold on to the property. If you're going to flick it and sell the property with a chunk deal or whatever it might be, you don't need a property manager at all. Routine inspections, you want to ensure they're going to do a minimum 2 routine inspections every 6 months. Depending on your tenancy, some property managers will do it every 3 months or every 4 months. But if you have had a long-term tenant, I definitely wouldn't be harassing them more than 6 monthly. Pay all your bills. You want to make sure a property manager can pay all your bills for you. Because especially when you're looking at a consideration of a super fund property, you want to make sure all your bills are paid by the property manager. It's so much easier for you to take your end of year statement and give it to your accountant rather than giving them all the bank statements for your tax return. It's going to cost you more for your super fund. So make sure you, I've got a few more people on today. It's got Sharon, Mark and Shell, Daz, Adam, Sally, these are all on here, very good. So that's basically a good one for property manager. And don't get cheap. Same thing again, don't be a tight ass. A tight ass as an investor will not always give you the best return from your property manager. So very often you say, oh no, say your rate, depends where you live. Sydney's cheaper than more regional areas. Brisbane is actually one of the most expensive property management areas as well. 1%, let's just work off that. I worked out a quick calculation for not going cheap. If you're on $500 a week in rent, 1% commission, so when you say you negotiate it, now I hear it a lot, I negotiate it from 7% down to 6% or 5% down to 4%. It's about $5 a week. If you're, as an investor, if you're being a tight ass, sorry for saying it so much, but I'm not a fan of it, you'll save $260 a year. That's $260 a year. Now that, realistically, for most families, isn't even a week's worth of food shopping. So you're going to save $260 a year. To save the 1%, the property manager or the company won't be as happy having you on their books at that lower rate. They still should give you the good service. That's their job, but pay properly. Pay people properly, but expect that service back. So it's okay to pay the higher dollar figure, but you can then demand the service back. Just say to your property guys, I'm not going to discount on this commission. I'm not going to ask you for a reduction whatsoever, but I've got high expectations. I'm paying you the proper rate, but I expect you to give me the professional service. All right, so that's property management. I'm big on not trying to negotiate too much over small things. Okay, the next one, got your property management in place. So this is a really important one. It's having an accountant who is on your level of property investment. So this is no disrespect to tax agents. There's a lot of cheap tax agents out there. They'll do your tax return, that's great. But you want a full-blown accountant. You want an accountant that does tax planning, that can also not just do your tax return. So an accountant won't give you advice. They're not allowed to give you advice, but they give you direction on who to chat to about getting advice. So if you're with an accountant and you start bringing up life insurance, most accountants will not do life insurance for you, but they can refer you onto someone who can. So as long as there's no sort of dodginess happening, you want an accountant who can refer you out to who you need as part of your life goals and your life plan for your property investment portfolio. And of course, the biggest thing is when you get into more professional investing, you need to know about structures. Do you put it in your own name? Do you put it under a company structure, a trust structure? Some people buy property with their super fund. So if you're buying with a super fund, you want to make sure you have a really good, solid account and give you advice on how to set it up, their trust, whether you pay outright for the property. And of course, you have to do tax returns. You want to make sure a solid accountant who has good property investment experience will give you a much better result come tax time, okay? So it's very important, for me anyway, to have a solid accountant on your books that can do your tax and really save you money. You can't hide from the tax man, but paying them the least amount possible is always the better option. So Darren, do I know to count good account? Yeah, I've got a couple of ideas there, Daz. Okay, so next one we've got here is quantity surveyor. So for those of you, hang on. For those of you who don't know, a quantity surveyor is a big part of your portfolio because they're going to supply you a depreciation schedule. Now, everyone who knows me, I know there's a lot of people in the group that don't know me yet. Well, actually, someone just admitted, Daz just admitted he's a tight ass. You don't do that on public, mate. So what you've got there is your quantity surveyor, they do a depreciation schedule. Now, a good quantity surveyor that I use, for example, is BMT and Associates. I've been dealing with these guys for 20 plus years. They do all my depreciation schedules and probably 90% of my clients as well. And with those depreciation schedules, they will normally last for 40 years. Obviously, over that 40-year period, they're going to change, things will be added by your accountant, etc. But they'll give you a professional report that can be relied upon if the ATO question anything. Because depreciation is a huge part of your portfolio. It's a non-cash deduction. So you don't have to go and outlay 10 grand for repairs. If you've got 10 grand worth of depreciation in your portfolio, that's going to make a big difference to either A, saving income tax, or B, saving tax on any positive geared rent you've got coming into the property itself. And also, if you want to go to the next level and do an owner build, which I've never done, never want to do, but some people do it, a bank will normally want a quantity surveyor to do basically survey the construction cost of what you're planning on building. Even if you're a licensed builder, but if you own a building, same thing, you still want to make sure the bank will want to see a quantity surveyor of what the costings are going to be to build this property. And they have to provide a full report, which you have to lodge with your loan application. But I definitely don't advise to an owner builder. Definitely not. Okay, quantity surveyor. So the next couple of things I want to talk about on here is part of your network. This next one is really, it's not really for your basic, if you're only like at the basic level of investing, so you might only have 1 or 2 properties, you probably don't need this yet. But once you get to an elite level or I suppose a professional investor, you definitely need these guys. And that is a private town planner. biggest word in this private town planner is the word private. So what that means is they're not employed by the council. These are independent private town planners. And what do you use these guys for? This is where, when you go next level investing, you might want to have a site, subdivide it, build a duplex, whatever you want to do. A private town planner will actually do a full assessment on your property, and they'll tell you how big the block sizes can be, where the easements are, and how do you get around easements when you're doing your actual subdivision. They do a full breakdown and schedule of costings into a timeline for you. So to do the subdivision might cost you 40 grand, but you're like, oh, I need 40 grand. But because it takes 6 months in most cases, or more or less, whatever it might be, there's different times you need the money. So you don't always have to have the 40 grand up front. And a private town planner, especially when we do our HMOs, which is house of multiple occupancy, when we change like a traditional, say, I don't know, 3-bedroom house and do a 5-bedroom studio sort of property to get higher rent yields, a private town planner, you need one for that for sure. Because they'll help you put the plans together to submit to council to be approved. And that's the main thing. You don't submit to council to not be approved. We're a big one. All our professional investors, we tell them not to push the boundaries too far with council, because you want to make sure when you want to get it into council and approved by council as quick as you can. If you can't make money out of the site by doing that, we always suggest to walk away from the site. But they do a full assessment and a full breakdown, and they actually format your site. They'll say, this land can be broken up here, this is where the driveway can go, they do everything for you, okay? So a private town planner is the best investment you can make when you become more of a professional style investor. Okay, the next one, guys, is of course the real estate agent. Now this is for sales. All right. A lot of people, don't like real estate agents, but they're there for a reason. Every industry, you've got your good ones, you've got your bad ones. You have to find good real estate agents that are surrounding your investment properties, because a good real estate agent, I suppose, how do I say this without hurting anyone's feelings? If you've got a good real estate agent, your first point of contact with that real estate agent is not when you want to sell your property. It's not long after you buy it. So a good real estate agent will keep in regular contact with you. So most real estate agents will have a patch in a suburb or postcode or whatever it might be. And what they do is they're supposed to like keep in contact with all the vendors in that area to keep them up to date with what the market's doing. They're not just there to play on Facebook, last minute, you give them a ring, they come and list and sell your property. A good real estate agent will keep you up to date with the marketplace. And they won't call you for you to sell your property. They'll call you just to have a general chit chat. I sold 50 Smith Street, just down the road from you. I got $550,000 and we sold it in 2 weeks. I'm really happy with that. Just wanted to let you know. That's what a good real estate agent will do, keep you updated and wait for you, in most cases, to make contact with them with potentially selling your property. But of course, you might not want to sell. So you don't want to be pushed into thinking you're selling or be made to feel that you're not worthy of the phone call to keep you up to date on what's happening in the marketplace. So biggest thing is a successful real estate agent can work for you in 2 ways. One, they keep you up to date with what's happening in the market around your property, and that can be for years. A good real estate agent won't care that you're not selling for years to come. The next thing is, you never know, they might have some sites available for you that might be of interest. So you want to be on a good real estate agent's database, okay? So you don't have to be like on 20 of them. I normally suggest if you've got one property in a certain suburb, try and pick the better one out of the 3 or 4 that are in that suburb and just keep in contact with them. And you just tell them, keep updated with what's happening. I'm not selling, but please let me know what you sell around the place so I have an idea of what prices are. Because you never know, you may have to sell your property last minute. It could be that someone gets sick, could be divorced, could be any reason you have to sell your property. I call it the Ds: death, divorce, the dick, the girlfriend. All right, these are the Ds, that reason why you have to sell your property in most reasons. So you want to make sure you have your real estate agent on tap, that they can communicate with you, and then you can communicate back for when you need to sell. And the next one as well, this is more involved for our professional investors, because as you become more of a professional investor, you go through a phase of where you get more time, so you're able to get more energy and more involved with your portfolio, but then you get busy. And when you get busy, you need a buyer's agent. Buyer's agent. They're also called a buyer's advocate. They're more used in Australia for celebrity purchases. They use them a lot. But a buyer's agent, say in other countries, say for example, America, you use a buyer's agent or back there, call it a real estate broker. You'll use them to buy and also to sell in most cases. So in other countries, a buyer's agent's huge, but a buyer's agent in Australia is not a common thing to use. I use them. I think they're fantastic if you get the right one, like everything, get the right buyer's agent. So a good buyer's agent will get you the properties that don't get to the marketplace. They will lean on their relationships to get the properties you need, whether it's a development property, whether it's one to do a room share on, or whatever it is, whatever. A good buyer's agent will get you the property off the market. I follow a lot of buyer's agents. I've got a lot of buyer's agent contacts, and they always send me information on different properties that are coming up and what we need for our clients as well. We're talking footy on here. This is interesting, Shannon. All right, so that's about the network, guys. So do you guys have any questions? Do you guys have any questions at the moment? I have got one question that was sent in. It's just a simple one, but do you guys have any questions for me? You got to ask me some questions, guys. I love questions. All right. I'll let you, I've always got about an 8-second delay on the live. So my first question here that was sent through, it's actually a very common question is can I put my rent up to include lawn mowing? This is the problem you face doing that. Bear with me. Let's see if this works. Oh, it doesn't. All right. So if your marketplace is here, say it's 400 a week rent, right? Oh, that's a bit small, sorry guys. 400 a week in rent, right? If you add lawn mowing, say for example, you want to add $25 per week because you want to get the lawns mowed as an investor. You've got to remember, a tenant has a responsibility and it should be written in their lease how often they have to mow your lawn. If you have a good property manager, we go back to that, most property managers can have special conditions. Like a big one I use, you're not allowed to park on the grass. Don't let your tenant park on the grass, it's going to ruin it. But a good property manager will have that special condition in your lease. But if you put your rent $25 higher, what you do is you push yourself above the market. And as everyone knows, it's a very internet-based world now. Like I know most real estate agents don't advertise on the paper anymore. It's all internet-based. So when people are doing their searches, you're going to get missed. So I never suggest to add lawn mowing to your rent because you're going to push your rent, in some cases, out of the marketplace. So you won't get any inquiries. So if all the inquiries are at 400 and you're at 425, you are not going to get inquiry. You're not going to get people through your front door. You can offer it once they're in the property, and you know, that's a lot better, but I wouldn't advertise it. Even if it says in the fine print, includes lawn mowing, people will just flick past you. So if they go to realestate.com or domain.com.au, they're going to flick straight past your property. They're not even going to see it. So you want to make sure you get people through the front door, get them through the front door, and then you can always offer it as an add-on. But realistically, a good tenant's going to keep your lawn up to scratch anyway. All right. So Scott's got a good one here. Can you increase your rent before the tenant's lease agreement has expired? There's two answers. You can increase the rent through a lease period, but it has to be written into the lease. So if you had a 12-month lease, you were getting 400 a week, and you want to put the rent up to 415 at a 6-month period, you can do that as long as it's already in the lease. As far goes as increasing it while the lease is in place, you can't, unfortunately. No, the lease is a contract. That's a legal contract as such, and you can't put up the rent until the end of the lease. But just remember, there's a certain amount of notice you need to give per state on a rental increase, and you can't increase the rent too far. So in some cases, if you've had a tenant in place for 10 years and they're paying like 100 plus below the rent, there's a high chance you're better off just moving that tenant on and getting a whole new tenant in place. Because to put that rent up $100, they actually have the right to reject that increase. So it depends on your scenario whether you want to do that or not. I hope that answered your question okay, Scott. So just here, so here you'll see here I've got like every week we offer that if you do want to have a 15-minute chat with me, you just book a call. You see under the property bloke, it's a calendar link. You click on that link for a 15-minute call, and you can book straight into my calendar, and we can have a 15-minute chat on what you're trying to achieve to see if you need any help or whatever it might be. But do we have any more questions, guys? That's always there. So I'm going to answer your question, Shannon. Is Jack Bird good investment for the Red V next year? Mate, I love my footy. I think Jack Bird is a great investment for the Red V, but is the Red V a great investment for Jack Bird, mate? That's my biggest question there. I think if you turn that around, it's not fair on Jack Bird, because like normal, St George get to the end and they choke. All right, so there's calendar link in there again. Guys, I appreciate you watching tonight. I hope you learned something. Each week, we go into more detail. Next week, I'm going to actually break down how an investment property cash flow works of the property itself in more detail. I have a fancy spreadsheet I use. I'm going to go through that bit by bit each week. Sorry, bit by bit next week, and just break it down for you and just look at different assumptions and different things I put in place when I'm doing my numbers for myself or for our clients, to a bit of a worst case scenario where you're going to work on and what you'll allow for when you're looking at buying an investment property. So that's next week. You won't get to see my ugly head as much. I'll be doing it on my computer next week, sharing my screen. But guys, thanks again for listening, and I hope you're all doing well, and I look forward to catching you next week. Reach out if you have any questions. Thanks, guys.